Did Trump make stocks go lower? And in today's video, I'm also going to show you guys how you can have a chance to win a Take Profit Trader 50K test account. Now today, when we come over and look at the S&P 500, we can see we have the potential of forming a lower high, which could set up that ABC pattern that we've been talking about for a little bit. When we come over and look at how the indices fared across the board today, the Dow was down 61 points. The NASDAQ was down 137 points. S&P 500 down 30 points, with the Russell 2000 being up 1.12%. However, when we come over and look at advancing issues versus declining, it was very evenly split. We had 47.5% of issues advancing, with only 48.6% of issues declining on the day. Then as we come over and look at the sectors across the board, basic materials were by far outpacing everything to the upside, but we only had 4 of the sectors in the green: basic materials, energy, followed by real estate and consumer cyclicals. Every other sector was in the red. And if you look down at the bottom, technology was leading the way down. Now we come over and look at the fear and greed index. We are back just barely slightly into neutral territory with a reading of 55. Now the market started to have problems today when we saw the US service activity flat in July's ISM data. Now we can see when the ISM number came out this morning, right around 10 o'clock, we can see the dollar index goes crashing lower. We also saw the S&P 500 make a substantial push down lower. And if we come out here and we look at the ISM data, it came in at 50.1. They were forecasting a reading of 51.5. The previous reading was 50.8. Now, some of the things this article goes on to talk about is the fact that Trump's tariffs raised the average US tariff rate to the highest since 1934. We also see Fed governors dissent, citing jobs market risk over inflation. However, Jay Powell saying, hold up, not so quick. We may not be getting ready to lower rates just yet. Now, today, Trump was also in the news today. Trump threatens drug makers with a 250% tariffs. Here's when higher levies could come into play. Now, the latest level of tariffs on pharmaceutical industry is at the highest yet from the president. Basically what they go on to say, in 1.5 years maximum, it's going to reach 150%. And then it's going to go to 250% because we want pharmaceuticals made in our country, is what Trump went on to say. Now, if you thought it was just pharmaceuticals that Trump was going on a rampage for this morning, talking about tariffs, well, you know what? You were wrong, because we come over and look right here. Trump says new semiconductor tariff plan coming as soon as next week. And it seems like every single day, Trump this, Trump that, you get a tariff, your tariff's going to go up. Oh, look at that person. They're such a great country. But one thing that we've noticed is as we get more and more talks about tariffs is having less and less of an impact on the market. Then Trump still wasn't done with that, because we see today, JP Morgan and Bank of America stocks drop as Trump warns of payback for bad treatment. And what it basically goes on to say, if we scroll this down here just a little bit, Trump complained that banks allegedly acted unfairly towards him when he wanted to open accounts with them. He said, I have hundreds of millions of dollars, many accounts loaded up with cash. And JP Morgan told me, I'm sorry, sir, we can't have you. Now, why would JP Morgan not want to go ahead and do business with Trump? Let me know your thoughts in the comment section down below. If we come over and look at the chart of some of the bank stocks out there, JP Morgan did come down early on, but look, it gained back half of what it actually lost. We look at this on the 5-minute chart. You can see JP Morgan off the rip, kind of on the move lower, and got about 50% of their way back up. We look at Bank of America. We see that move down. Bank of America looks like it did a little bit better of a retracement back up. We measure swing high all the way down here to the swing low, and notice we almost made it back to the 78% Fibonacci retracement level. Now, if we come over and look at the economic calendar for tomorrow, we really have no major economic news. Now, we do have the 10-year bond auction coming out at 101, but other than that, really no major economic news to contend with for tomorrow. However, after the bell, AMD has a little bit of activity. We see a spike up, we see a spike down. And if we look, AMD had earnings after the bell. SMCI has earnings after the bell. Snap has earnings after the bell. And if we actually look at the big expected movers out there, Snap, Lucid, SMCI, AMD is expected to move plus or minus 9%, but Snap is expected to move plus or minus 15%. If we come over and look at a chart of Snap, yikes, it looks like someone snapped it right off. We can see Snap is actually down almost 15%, 14.91% at the time of recording this video. That is massive. Let's look at this on the daily chart real quick. snap is all the way down here, giving up several weeks of gains. Now, if we could have held out a little bit longer here, we could have had left shoulder, head, right shoulder, right over in here. Now, today on the live stream, we gave away another Take Profit Trader account. And in this video, you have a way to win a Take Profit Trader 50K test account. All you have to do is sign up to the email list down below, right here, the first link in the description box down below. Then in this video, comment code epitome equals best TPT deal. I want to make you guys aware of some amazing prop firm deals out there. Apex Trader funding, 80% off all their evaluation accounts, passing as little as 1 day. Tradeify, 35% off all account sizes. Use promo code Mike for those two prop firms. Last but not least, Take Profit Trader, the prop firm with the best payout policy out there. You can get 40% off all their evaluation accounts, no activation fee, and get your test fee refunded on your first payout. To take advantage of that offer, use promo code epitome at checkout. Now, when we come over and look at the volatility index, the VIX was up 31 cents on the day. And I warned you guys yesterday, with the VIX closing down more than 20% yesterday, highly probable that today or tomorrow was going to be a down day in the market. We look at the dollar index today. Dollar index, kind of an inverted hammer candle. Wick on the top, we see the dollar index came spiking up, only to come right back down. Now, if we look at the SPY real quick, notice, what do we have? Well, we came up, we filled the gap that we left behind from last Friday, and then now we started to turn back down here just a bit. Now, if we can get follow through tomorrow and in the coming days, we want to go ahead and grab our Fibonacci extension tool, measure A to B leg, which is a movement down, the corrective leg back up, which will be the B to C leg, and we project right down here for D at about 614.14. Now, if we go back and we look at this, let's say on a weekly chart, notice that highlighted zone right up in here is exactly that same area that we see the ABC pattern completing on off the daily chart. MACD indicator is still crossed to the downside. Now, come over and look at the 4-hour chart. MACD indicator almost down at the zero line. And we'll see, do we continue to push lower? Because if we do start to pull back, if we do start to come down here a little bit, we're going to see the MACD indicator still making new lows at this point. On the 30-minute chart, MACD indicator basically flatline right near that zero line. Today, we formed a B as in boy shaped profile. Now, if we start breaking below the lower edge of this distribution area of the profile, that would signify highly probable we're going to go lower. And if we look left, where are we likely to go? We have gap support right down here at about 624.64. Anything below that, then I want to look to see, can we come all the way down, filling the gap at about 621.74. Now, as we jump over and take a look at the futures markets real quick, we look over here on the 4-hour chart, and now if we grab our Fibonacci retracement tool, measure high to low, notice we came almost up to the 61.8 Fibonacci retracement level. Now, if we're going to get a continuation lower, let's go ahead and map that out. Where would that complete in the futures market? We grab our Fibonacci extension tool, measure A to B. We grab it up, we measure B to C, and we project down here for D, which completes very close towards another untested point of control at about 61.45 and a half. Now, one thing I do want to make you guys aware of, if you're trying to target this lower pattern, just note, unless we break the swing point down here, the pattern's truly not validated just yet. Now, that doesn't mean we can't go ahead and still play the pattern. It's just not a validated pattern until we break that. So if we can get into some type of trade up here and we want to push runners lower, this could still be a target for runners, just not a primary target. I'd also want to pay attention to some of these high volume nodes, 62.65, and down here about 62.35. Now, as we come over and look at the daily profiles off the 30-minute chart, you can see that kind of lowercase b as in boy. Now, one thing I want to caution you guys on, if tonight we start breaking below this distribution area, value low and the low of the day, then we start coming back up, we can then look to play the point of control as a target location, then value area high. Anything above value area high, I want to look to shoot right back towards this structure breakdown point, also near that minus development area, about 63.56. Now, in the event that we just simply break value area low or the low of the day and we continue to go lower, where are we likely to go next? That's where I want to refer back over to the 4-hour chart and the weekly profiles. The next stop I'd want to focus on would be this high volume node at about 63.03. Below that, then I'm looking at the next high volume node at 62.68. Then the higher volume node down here at 62.37 and a half. Anything below that, then I'm looking to target that ABC pattern along with that untested point of control right around 61.48 to 61.50. Now, as we come over and look at the QQQs today, you can see we've already had the Fibonacci retracement level drawn. Now, we did spike a little bit above the 61.8. Then we get a nice rejection candle on the way back down. Now, if this candle holds, if the high from the day holds, then that really sets up that we have this A to B equals C to D pattern on the way down. For that, we want to grab our Fibonacci extension tool. We want to measure the A to B leg. We want to measure the corrective leg on the way back up, which is the B to C leg. And then we project down here for D at about 543.50. If we zoom this out here just a bit, notice that pattern would complete very close near that 61.8 Fibonacci retracement level. And if we're going to go that low, why not just be an overachiever and come down and go ahead and close out this gap as well? One thing I do like about this target, it's kind of an area of a minus development area in the profile. Basically, a minus development area is nothing more than basically an efficiency in the market. You can see not a lot of volume was being built out down around these levels. The further the histogram sticks out, the more volume was traded at that particular price point. Now on the 4-hour chart, MACD indicator still kind of crossed to the downside, and you can see that large gaping gap we have left behind from yesterday. Then we jump over and look at the 30-minute chart real quick, and what do we got? Well, we have that lowercase b. Now, if we can get above value area high, I would want to target this area right up in here, anywhere from about 563 and a quarter up here to about 564.27. Anything above that, then I'd look right up here towards 565.37, and then the highs from today, and then see, all right, can we continue to push maybe up towards a higher Fibonacci retracement level? Keep in mind, a higher level would be the 786, which would be up here about 569.69. We start breaching that level, then we're probably going to see the Qs make a run towards all-time highs. However, in the event that we break below this distribution area of the profile, then I want to target gap support from yesterday at about 558.95. Then I want to look for that entire gap to come down and be filled at about 553.83. Now, as I jump over and look at the futures markets real quick, we can already see this playing out. We had that push up yesterday. We've already started to retrace back down. And today we were able to retrace at least 50% of yesterday's move. Now, this is twofold. One, this can set up an ABC pattern up or an ABC pattern down. You're probably saying, Mike, which pattern do I play for? Is it the up move or the down move? Well, the areas we want to focus on for validation would be the swing low down here or the swing high. If the market can turn around anywhere from the current level to the 786, we have a potential for an ABC pattern on the way up. Now let's play devil's advocate real quick. If today was the low in the market and we go no higher and we break the swing high up here, that would give us a price completion of about 23,717. Now to play devil's advocate on the downside, we have the impulse move right here. Then we have the corrective move right up to here, and that will complete all the way down here at about 22,330.19. Now keep in mind, before that ABC target, we do have an untested point of control at about 22,430 off of a weekly volume profile. We can see if we zoom this back, that goes all the way back towards the end of June, where that untested point of control is left behind from. Now, as we come over, look at the daily profiles real quick. Notice right now, we are pushing on the low of the day. Today, we were able to take out that P point once again, but look at the distribution on this profile. This could be a double distribution day or an uppercase B. You have one distribution here, then right up in this area. So tonight, if we do start to bounce back up, look for the market to get a rejection back down anywhere within this zone. Now that zone is going to be anywhere from about 23,221 to about 23,302. Now, in the event that we can stay below value area low, which comes in about 23,114 and a half, then I would want to turn my attention to say, all right, are we going to undo the entire move from yesterday? Because if we look at yesterday's volume profile, we have very poor structure all along this whole entire area. Now, if we do stay below value area low, I want to refer over here to the weekly charts. And more specifically, I want to pay attention to some of these critical levels. The next would be this high volume node at about 23,007. Beyond that would be about 22,881. Then down here to about 22,832. And then down here, 22,743. Anything below that price point, the next target would be that untested point of control at 22,420. Then the completion of the ABC pattern to the downside. Now, if you guys would like to learn about take profit traders, hidden scalping rule, then you want to make sure to check out this next video right here.